Hey there! We are the Green Target e-commerce accounting team. And today, we will be discussing about simple but accurate ways to calculate your cost of goods sold for your Amazon and e-commerce business. And how accurate cost of goods sold can help you gain a competitive advantage, get better at pricing and budgeting, and grow and scale your e-commerce business. Amazon and e-commerce sellers are in constant battle of stiff price competition. One of the core parts of pricing is the cost per unit of each item you sell. This becomes part of the cost of goods sold on a monthly basis. Gross margin is an important figure that needs to be monitored and analyzed by e-commerce sellers. Knowing whether you earn a profit on a certain type of product or SKU is a very valuable data. This is because you will need a good amount of gross profit to support the operating expenses of running your business, and still have a good portion left to make your business profitable. Bottom profit or net income involves all income, costs, and operating expenses. It's a much broader area. For now, we will just focus on getting your cost of goods sold every month accurately. For very small operations, a yearly computation of cost of goods sold may be enough. But for e-commerce businesses that have steady sales per month, and business owners who like more clarity on their business, getting the cost of goods sold every month is very important to arrive at their gross profit accurately. So, what are the costs required? Number 1, you need to get an accurate purchase cost amount. This is the amount you paid when you buy your inventory. It is usually found on the purchase order or supplier invoice. Number 2, you will need to account for shipping costs. These are shipping or freight costs to move your inventory from the supplier location or manufacturer site to the warehouse of your e-commerce platform. Number 3, you will need to add packaging costs. If you manufacture your products, this is the package supplies used to pack your finished products. If you buy already made products but you put custom branding or custom packaging on your products before putting them on sale, then it will be part of the product costs. Number 4 are facilities or storage costs. These are costs related to storing your inventory before going to the Amazon warehouse, or after getting delivered by your supplier, are undeniable part of the cost of goods sold. These costs can be too complicated to track per item or SKU. Because of this, you can recognize this as a cost of goods sold account on whatever has been paid as storage fees. Here is a simple method to calculate the cost of goods sold. First, you compute the cost per unit of each product. Get the number of units purchased per order. You then account for all the costs involved as discussed above. Divide the total cost by the total units purchased and received. Now you get the cost per unit. Second, you calculate the cost of goods sold. Get the total units sold for the month per sales channel. Multiply the units sold by the cost per unit. The resulting amount is the cost of goods sold for items sold during the month. Third, you also need to account for other types of costs of goods sold items. Other cost of goods sold items that are not included in the unit cost computation will be added as another COGS line item in the profit and loss. The A2X app further simplifies this process. Using A2X, we just need to get the cost per unit of each SKU of your inventory. Input it into the app unit cost table, and the app will calculate the cost of goods sold amount for each settlement. Then just press a button to sync the COGS to QuickBooks Online. And that's it. Hit like and subscribe to get instant notifications whenever we upload new videos that help Amazon and e-commerce sellers have better clarity in their business.